Let me preface this video with saying that I'm still trying to figure this stuff out. However, with that said, I have been having some success with this strategy that I've started working on. We are only in a few weeks of using this strategy. However, we did pass 2 TopStep combines. We've gotten to payout levels. We've taken a payout and we are securing profits. So far, this strategy has allowed me to trade according to my personality, and it's allowed me to accept red days and accept my green days. So with that said, I'm going to attempt to teach you guys how to trade this strategy, show you what I'm looking for, show you what I'm not looking for, show you some examples of winning setups, winning trades, and losing setups, losing trades, and point out setups that I wouldn't take and why I would not take them. That's something a lot of strategy videos fail is I want to see a setup that meets all the criteria. And if it doesn't work, I need to know why, or I need to know why you wouldn't take that. So I think that would be helpful. I'm not sure what the structure of this video is going to be, so I'm just going to ramble and then I'll throw it all together in post. But first, let's get to the blackboard. There's a few things we have to go over. There's a couple of things I can't teach you. And one is self-control. And the other is risk management. Ran out of space. These two things, I can only show you what I do, but it's going to be different for everyone. Especially self-control. I mean, nobody can make you start obeying your own rules and respecting your emotions that you're going through. So that's just something you have to go through on your own and put time on the charts and trade demo, trade sim, trade prop firm accounts, trade real money, lose money, make money, and figure all that stuff out. However, you need to be extremely aware of the emotions you go through and how that affects you trading. If you're not, and you're blind to that, or you're naive to that, and you think it's the setup or the market or whatever that's messing you up or making you lose money, you're in for a long ride, because until you realize it's you, you're not going to get this. The other is risk management. Again, I can show you what I do, but this is going to be different for everyone. Everyone has their own preconceived notions of money. Everyone is going to be affected by losing $20 differently. Everyone's going to be affected by losing $200 differently. And then the same making money. Everyone's going to be affected differently, making a certain amount of money. So that's just going to be another thing that you have to figure out on your own. How those numbers affect you and what are you okay with stopping on the day. These two things I attempt to show in my live streams, to show you how I handle trading on a day-to-day basis. But again, that's going to be different for everyone. So just be very aware that these two things are the main drivers of how successful you are in the markets. This strategy, I am taking 2 to 5-ish points per trade. So that's and on minis, anywhere from 1 to 3 minis, 2 to 5-ish points per trade, a handful of trades per day. So a trade could be anywhere from $40 winning or losing all the way up to $300 winning or losing. Just depends on the market, how it's moving, but I'm not aiming to get a certain amount per trade every single time. I'm really trying to let the market dictate how much it's willing to give or take from me. And obviously, when a setup forms, I can kind of eyeball and see how much I will be risking on it. And if it's just too much, I just won't take it. I either won't take it, or I can just scale down, or just, skip it altogether. And that's sometimes the best thing to do and wait for the next one. We're going to be on the 5-second chart. So there are plenty of opportunities to take trades throughout the day. That's something I found that's really helping me, is going down to a super low time frame, which gives me plenty of chances throughout the day. If maybe I'm not feeling it in the morning and I want to come back later, or it doesn't make me feel like I missed an opportunity. If I'm not looking at the charts, or I, am scared to take a trade or something like that, if I want to just wait, I can, and there will be more opportunities later on. When I was trading like the 1 minute, the 2 minute, the 5 minute, there's way less chances to take trades based on what I'm looking for. If I miss something, now I have to wait like an hour, 2 hours, maybe even until the next day before I can take a trade again. Or if I made a mistake and missed something and took a losing trade, now I kind of have to just accept my red day because that was my only shot. On the 5-second chart, 2 to 5-ish points per trade, I can, as long as I'm not taking red, I can just keep trading because there's plenty of chances. If I need to take a break, if I feel like my emotions are getting to me, which I have done and I've spoken about, I can just come back and keep looking for more trades later on. So that's something that has greatly improved the emotions for me trading, knowing that I have multiple opportunities. I don't feel like I'm missing anything because, again, there's setups forming throughout the whole entire day. So the actual setups and patterns I'm looking for are definitely based on ICT. So if you don't believe in that, or you're a hater, or you don't like ICT, I guess just carry on. But there's a couple things we do need to be aware of, and I'm not going to go in too much detail. There's other videos that explain these concepts a lot better, but the one is fair value gaps, and then the other one is where liquidity is, which fair value gaps I can show you on the 1 minute. There's one right here. We'll talk about it here in a second. And then liquidity is really just at swing highs and swing lows. So if the market's doing something like this, there would be liquidity resting above that high, and then there's liquidity resting beneath this low. So if the market's right here in the middle, we're just looking for the market to move and take one of these out, which it could come down here, take out that one. Now that it took that out, we would be looking for a setup to go up to the top and take out that high next. So I'm trying to read the market on the 1 minute and the 5 minute, looking at these liquidity zones or areas or liquidity grabs or whatever. And based on my discretion of where the market is wanting to go, I'm looking for fair value gaps that are on the 5 minute or the 1 minute, and then looking for entries on the 5-second. If you don't know what a fair value gap is, let's show you. So it takes three candles to form a fair value gap. So there's candle 1, there's candle 2, and there's candle 3. Get the wicks on here. Now, doesn't really matter what colors these are, but this would be a bullish fair value gap. We are expecting the market to go higher, and this is a fair value gap because candle 1's high right here does not overlap candle 3's high. So we have all of this, which is the fair value gap. So we are expecting, the theory is that the market moved so quick through here and it's wanting to go higher because of maybe a liquidity grab or something like that. So now we're expecting the market to come, we're expecting a candle or a couple candles to come back into this area. And then this is where we can enter. And we have a place to put our stop at either beneath the fair value gap or the first candle down here. It really just depends. But we're expecting the market to come back and then rip off of that and keep going higher. So the importance of the fair value gaps is to give us a place to enter, a place to put our stop, and a place to put our exit. The reason why that's so important is if you enter and you're just hoping the market goes up and the market doesn't go up and it's coming back, if you don't have a place to put your stop, you can just lose infinite amounts of money. Or you're just going to be sitting there hoping that it keeps going in your favor, which is a very quick way to blow an account. With this, having a setup that gives you a stop, if I enter right here and the market keeps going down past the stop, well, now this setup is invalid and it didn't work. I have to get out immediately because I was wrong. The market can come back up, but my entry was wrong and I need to wait for another entry. The most important thing is it shows you where to put your stop. And if you're not thinking about your risk on every trade and managing how much you're about to lose, again, just it goes back to what I was talking about earlier with the risk management. That's one of the most important things. You need to be able to handle your losses and control those more than you're controlling your wins. So this is a bullish fair value gap. You would just invert this for a bearish fair value gap. We'll just draw that real quick. So again, 3 candles with wicks wherever they are. And you don't want the wicks of the low of candle 1 to overlap the low of candle 3. And you have the body of the middle candle right there. So this would be the fair value gap. So now we're expecting, or if we're expecting the market to go down, we wait for the market to come back into this spot. It could just come up to this wick right here. So we could just have another candle just like this with a little wick, and we would just enter right here and short with our stop up here. Gives us a place to manage how much we're going to lose. So enough of drawing. Let me just point out a couple fair value gaps looking at the actual candles. So again, if you already know about fair value gaps, just skip to the next chapter down below, because this is probably boring. But on this chart up here, let me take off the crosshair. We've got candle 1, candle 2, candle 3, this low, and that high do not overlap. So this is a fair value gap right here. So wait for the market to come back into it. Anywhere in here we enter and exit as it moves up. Again, now we have 1, 2, 3 candles form a fair value gap up here, but we have another one right here, so you can treat that as one big one. And again, market comes back up into this short and take profit down there. Now, not every fair value gap means something. That's where the liquidity grabs and kind of knowing, having discretion or bias of where the market's wanting to go helps you dictate which fair value gaps to enter on and kind of helps avoid the losers, obviously. That's a totally different topic, kind of. I'm just looking at the 5-second chart. That's what we'll be looking at, and getting in and out very quickly. We don't really need to worry too much about the overall bias of the market. And you will see that here when we go over some of these trades. All right, now to the actual 5-second entries setups, what I'm looking for throughout the day. So I just picked a random day to look at. I'm very confident that this works on almost any day. I did not cherry pick a day that had setups, because these setups do form every day, all day, no matter what's going on. Now it comes down to you if you can pick out the winners and not have too many losers. And that, again, comes back to self-control and risk management, things that you just have to try to figure out on your own. But the actual setup that I'm looking for, we have a 5-minute. This is our 5-minute chart up here. This is our 1 minute, and then our 5-second will be down here. So looking at the market right here at open, we had a couple fair value gaps, but so there's 3 actually. You got 1, 2, 3, all bullish, indicating that we're going higher. If we just draw out a triangle on a 1 minute fair value gap and then come over here and look at the 5-second chart. So this move up correlates with this move up. So now looking at this general area, we would be looking for bullish fair value gaps because we formed one on the higher time frame. We wait for the market to come back, and then we drop down into a 5-second and look for bullish fair value gaps on the 5-second to get in and get out quickly. So I'm going to take the rectangle off of here, but obviously we're just looking in this area. And the market comes down. We create one right here, which you could have entered after it came back, and this would either be a loser or a very small winner. I don't remember if I took this. There's a couple of reasons why maybe you wouldn't want to take it. We did rip up, consolidated, and then we displaced down on the 5-second. Now this could have been looked at as we were just repricing all this displacement. But the market came up and we had a pretty strong reaction off this 5-second fair value gap down. So I don't know if I would have bought when we came back. But regardless, this could have been a loser. But again, just for a few points, waiting for the market to come back around like 817, then our stop down here. So 5 points you would have lost. Or you could have bought at 17 and got out for 3 points. So it wouldn't have been the best risk to reward ratio, but it really just depends on how you manage the trade, where you got in at. Could have been a loser, could have been a winner, either way. However, the market does just keep trailing down, and then we do get a bullish fair value gap down here at the lows. And if you notice, this little low right here took out this low back here just by a little bit, and that's all it's needed. So that was it did go down, take out liquidity that was resting right there at that low, and then we displaced up. Market came back into this, buying with a stop at the lows. So risking like, I don't know, 5-ish points, 5-6 points. And again, I'm not looking for a lot of points on these trades. I'm looking for quick trades. So market comes back, fills in this volume imbalance and this fair value gap, and buy it and wait for a quick move up and get out, take my points, wait for the next one. If you were so inclined to hold or to trail your stop, obviously could have taken a ton of points out of this, but we are still in this 1 minute fair value gap on the way up, and we create another 5-second fair value gap right here. So again, market comes up, creates the gap, you buy, get out for a few points. We create another small one right here. But again, we're in the higher time frame 1 minute fair value gap. So you could have bought again. So you could have taken one loser and then 1, 2, 3 winners very quickly. And then there's another one right there at the top. I don't know if I would have kept taking after we made new highs. I would have probably waited for more confirmation on a higher time frame. But that's basically what I'm looking for. Create a gap on the 1 minute or the 5 minute, wait for the market to come back into that area, and then look for fair value gaps in the same direction on the 5-second chart. So here is a 5 minute bullish fair value gap. Let's just draw that out and see what we have. So there's the gap. So what we would be doing is looking for 5-second bearish fair value gaps within this area. Let me move this over because we don't want to include the move down. So the market was a little sloppy on the 5 second. There's a lot of like actual volume imbalances, which is where bodies of candles do not overlap. Not sure if that's hard to see or not, but you can see these gaps between bodies right here, bodies right there. Again, you can treat those as fair value gaps. So if you entered on those or not, that's kind of your discretion, but we would be looking for bearish fair value gaps, so shorting opportunities in this range on the 5 second. And we have a gap right here. We never really got up to it until a couple minutes later. I don't really care to take fair value gaps on the 5 second chart that form and then don't give you an opportunity for a few seconds. I want a candle. I want 2 or 3 candles immediately that retrace into that gap that we can then rip off of. But it was an opportunity. You could just mark it in, obviously, because the market did come down and offer several points there. You would not be taking any bullish gaps, even though some of them do work. But in this area, we would be looking for bearish gaps because we are in a bearish 5-minute fair value gap. So any of these, we have a huge one right there. Again, market comes, we displace down. It even takes out a swing. We even have a higher high, and you short that, any one of those, and take several points off of that. And I mean, you can see how quickly this is a 5, only like 5 candles. So 20, 25 seconds, you're in and you're out. But multiple gaps worked. There's a bearish, bearish, bearish. And that's just the beginning of this whole range. So that was looking at kind of like the whole day off of the 5-minute. Again, I'm taking trades on the 5 second, so I really kind of like to base them off the 1 minute unless there's a really good setup on the 5-minute. That one, I'm not a huge fan of double fair value gaps. It just makes the range much larger. So if we just go down into the 1 minute chart, in the afternoon, there is a bullish fair value gap. This even made new lower lows. If we draw out our rectangle on here, because we're looking to see how the market reacted on the 5 second in this area right there. So let's scroll over and find where that was and see if there's any bullish fair value gaps that we could have made money on. This left side, obviously, that's where it formed. So there's going to be some 5-second there, but let's take it off of that. So in this area, we came down into the 1 minute and we did create a gap, fair value gap, the 5-second right here. Again, you could have taken this, you could have skipped it because we are near the highs, these short-term highs, we're near those. So we're kind of reaching for those. So if we were to get in that close, like what are the chances we go break those highs right now? So this either could have been a skipped trade or just a missed trade. Another reason why I would have may skip this would have skipped this would be entering up here on this gap. Our stop would have to be at those lows. I don't know. It's hard to tell if we would have taken it or not, but either way, it could have been a loser, could have been a winner. I mean, could have been a loser, could have been a skip trade. We're really banking on a higher win rate because we have lots of opportunities throughout the day. So we displace lower on the 5-second into the 1 minute fair value gap, and then we start working our way up. Let me take this off here. Create a gap right there. So immediately mark it in as these bodies are just sitting there. Yeah, you wait for it to come back you would be withstanding this little wick down. However, if your stop's at this low, this short-term low, you're still safe, and we keep moving up and then create another fair value gap. So again, this went pretty quickly. Maybe you could have entered after another gap formed and just held this. I don't know. Again, that comes back to you and how you manage your trades. Extremely important things is you get in and you get out as quick as you can. On my live streams, you will see there are times where we enter and then the market's not really doing anything and I just exit because I don't want to be in it anymore. I would rather just get out and wait for my next opportunity. These gaps form throughout the day everywhere. Here's a bullish fair value gap. We come back into it and we rip off of it. So this day kind of sucked, actually. I mean, on the 5-minute, we came up and then we got stuck in this range right here. However, when you drop down to the 1-minute and then the 5-second, there are plenty of opportunities to take trades. I think it's a pretty decent strategy for all types of days, especially if you can make money on a day that we just range for the whole afternoon. I'm pretty sure we could have made money on this day, but we'll never know. The only thing we can do is keep trying to trade this moving forward. This will be the strategy I trade for the foreseeable future until I hit a wall or I feel like I just can't do it anymore, but I don't see why I can't. It seems to be working very well and it fits me, and that's what's important. The only issue I have with this strategy is there is some discretion, but learning the markets, you can get that discretion to try to figure out what it's wanting to do. If you guys have any more questions about this, let me know. If you want to see live executions of this, I am streaming in the mornings, usually just for 1 to 2 hours. I don't like sitting and trading all day. I need to either take my money, lose my money, and then get out of there and stop before I make anything worse, because I only have so much emotions every day. I only have so much emotional capital every day, and I burned through that very quickly. It does me best to take quick trades and get off the charts. Here is to a profitable 2024, and hopefully the same for all you guys. Thanks for watching, and we will see you on the live streams.